an interesting market here today. We're definitely closing here at our lows. There you have the closing bell on this Tuesday, June 16th, 2009. You are looking at live pictures of the S&P futures pit at the Chicago Mercantile Exchange. But again, Matt, we're closing at our lows here today.
I want to go there for some time.
Should I get you a ticket now?
Absolutely. Oh, you want to send me off the set as quickly as possible?
No.
Let's take a look, as long as Carol will tolerate me, at the action today as the market settles. Closing near session lows after a morning of gains. The S&P actually at session lows, down 1.3% to 911. Round that up to 912 if it makes you feel more comfortable. The Dow down more than 108 points right now on the last trade, 85.04. And the Nasdaq falling 1.1% to 1796. So some big losses, and you're going to tell us
I am indeed.
who led them.
As long as you'll keep me around here. All right, consumer discretionary material stocks, really the biggest drag today. Each of those groups down more than 2%. Healthcare, just talking about healthcare stocks, managed care stocks with Suzanne. Well, healthcare, the only group higher today. She broke down some of the specific gains we saw really in some of those names.
All right, let's go back down to the New York Stock Exchange. Chris Valerio standing by. And Chris, what do you have for us?
I'm looking at how we ended here. So let me tell you, let me break it down for you. So those material and energy stocks really ended up weighing on us. Remember, again, they started the session higher. We thought they might provide that leadership. They didn't end up doing so. They ended up weighing on the overall averages. That said, consumer discretionary stocks, if we take a look just at the story and sentiment of the day, consumer discretionary stocks were really the true weights of the session. You take a look at how retailers did. You had all 28 stocks on that S&P 500 retailing index close out in the red, down 3% for the day, as you can see there. Best Buy was the big catalyst on that front. As you well know, we've been reporting it all day, but those same store sales fell much more than some analysts had expected, even though first quarter revenue, excluding some items, came in better than expected. Now, delve in a little more to that retail topic, because I looked through several research on the day, and several analysts continue to point out the same thing, and specifically FBR Capital Markets. This is what they said. They said, well, traffic seems to be returning to malls because, of course, when the weather is better, people like to go out and shop. It still seems that retail outlets around the country, the conversion levels in those retail outlets still remain weak. And that is to say that retailers have to keep offering the right merchandise at the right prices to generate sales. So one of the things that people are thinking about within that retail index. Now, the other thing, Matt, was we had that telecom call out. Barclays cutting AT&T to equal weight from overweight. The brokerage also, and this was the important thing, downgrading the industry as a whole to neutral. Why did Barclays do this? Well, Barclays said there was anemic employment outlook and late-stage cyclical nature of these telecom stocks. So those telecom stocks, and really just that story kind of weighing on sentiment. Have to mention eco data really quickly, because certainly a part of the session we had a wealth of economic data. Of course, you know, those producer price index coming in a little better than expected, but it was really the housing data that a lot of people were talking about. You had housing starts come in much better than expected. That said, housing stocks gained a little bit on the day, but the market kind of shrugging it off slightly. Again, the concern within the broader market is, yes, we are seeing some signs of improvement in the economy, but is that going to stagnate, or can it actually improve? And at what point is that going to mean profits, Matt?
All right, Chris, thanks very much for that. Now, just about 50 stocks reaching new 52-week highs. Merge Healthcare is one of them. That stock up 222% this year. The company makes medical imaging software. Destination Maternity also on the list. The maternity clothing retailer is up 124% for the year. Of course it is. All right, many more stocks sinking to new 52-week lows today, about 134 of them to be exact. Callaway Golf is among them. That stock almost 40% down as the U.S. Open gets underway, interestingly, on Thursday here in New York, out at Bethpage, Long Island. Nobel Learning Communities also down. The company operates private schools in the U.S. I'm going to guess it's learning. Nobel Learning Communities, Nobel Education there. That stock off about 22%.
Probably a good guess.